Hey, you actually caught me on the weekend with a t-shirt on. How about that? Anyways, today we're getting into some real cash flow leaks. So this won't be another one of the generic online, do a software audit to make sure you're not paying for softwares you don't use. This won't be the make sure you're watching your meal expenses or your travel or make sure your office expenses aren't creeping up. This won't be a stop mixing business with personal type of video. Do all of those things, of course, but in this one, we're going to talk about some of those real cash flow leaks that really hurt a lot of small business owners in real life without them even noticing. So, this is going to be a scale level conversation. This is going to be a profit margin conversation. So, let's get right into it. Well, actually, before we get right into it, I'm Albert. Or Albert the CPA, or Albert C. Hurston Jr. CPA, owner, founder, CEO of Right Twist Accounting Solutions, running with my amazing wife, Lauren, and our amazing team. And we are your one-stop shop accounting and tax solution. Everything from bookkeeping and tax preparation to fractional CFO and tax strategy. We do it all in one right choice. So let's get into the video. And in this video, I'm gonna actually just go through the list. So I'm gonna look down at my notes a little bit more than I normally would because I want to make sure I'm giving you these. But I'm gonna go through the leaks and get in the comments and let's actually talk about these leaks. And if you need clarification, let's make this a really live comment section because this will save a lot of businesses a lot of headaches. So let's dive in. Leak number one: underbilled work. Underbilled work means you're just doing a lot of work that you're not charging for. It can be under the guise of like these discounts, these throw-ins, these it's normally this, but I'm gonna charge that. Because when you do this stuff, you have to realize that you don't solve a problem with discounts. You solve a problem with great services and great products. And I've been on this theme of repeating myself because I want to do it here a little bit too. You have to always remember you don't solve a problem with discounts. You solve a problem with great service and great products. That's really, really important for small business owners to hear early on, to hear consistently, because a lot of us who've been around a long time, we've learned that lesson the hard way. So leak number one is underbilled work. And again, that is you just not billing for everything you're doing. Leak number two: scope creep. Scope creep kills profit margin because something that I want to say as a theme, like somebody has to pay for all of this stuff. Like every time you deliver a service, especially if you have a team, so you're paying for your team, you're paying for your software, you're paying for the travel if you're doing it in person. If you're selling products and you're doing this stuff, you paying the cost of the products. Someone is paying. And if you don't charge the client, it's you and your profit margin who are paying. So you don't want that. Somebody got to pay for it. Somebody got to pay for it, and that somebody should not be you. It should be the people who are getting the value of it or the benefit of it always. So, scope creep. Scope creep is where you agree to one thing, and just as you're doing that thing, the scope just continues to grow. This is really pivotal for my service providers because a lot of this is really targeted more towards service providers than products because products is a little bit more straightforward. But with service providers, we can have crazy cash flow leaks, and scope creep is a big one. We agreed that we were going to be doing one thing, and the next thing we know, we had a whole bunch of, hey, real quick question. We agreed to monthly meetings. Now we talking 2-3 times a week, 2-3 times a month, because, yeah, let me get a quick question. And every time you give up that quick question, you have to put a cost on that. You have to realize that all of your time costs money. Just because you don't feel it and you don't have it written down and you ain't on the clock, every single hour of your time costs money, and you need a billable rate tied to that so you know how much those quick questions are costing you. Another one is the client that keeps asking for these one-time favors that are outside of what they pay you for. Again, same concept. All of these one-time favors cost you something, because just because it's not money that you literally have to pay out, I'm not going to go into opportunity costs, but every single ounce of your time should have a billable amount tied to it because it's your time, and if you're giving it to somebody else, they need to be paying you for it. And that's just that, because when they're not and you're giving that time out for free, it's literally hitting your bottom line, it's literally hitting your profit margin. And as I said at the beginning, somebody got to pay for this stuff, and if you giving your time away for free, You paying for it, your business paying for it, and your profit margin is lower. That's a cash flow leak. Number three, poor invoice management. A lot of people like try to set up automations. They try to do all this stuff with auto pay. They do all of these things. All that stuff is fine, but someone has to have eyes on the people who owe you money, on the people who you're billing, on all of that stuff, because invoices get crazy. Slow invoicing, not following up on invoices, not holding the line on invoices. A lot of clients, a lot of y'all's clients probably treat your invoices like a reminder or a suggestion and not a hard deadline, not a hard agreement. So it has to be penalties. So if you are doing net 30 on your invoicing and they don't pay it within them 30 days, they got to have some kind of consequence. It can't just be like, oh yeah, I get it, it's fine. Because you are consistently setting expectations. That's why we talk about being intentional with your expectation setting, because you are consistently setting expectations. And if you're relaxed around any of these things, if you're relaxed around what the scope is or what you do or what y'all agreement is, if you're relaxed or too laxed on when they pay you or how serious you are about your money, these things are literally hitting your bottom line and your profit margin. Because again, every single thing you do that you don't get paid for, you're costing yourself, because you still have to pay your cost to be the boss. You still have to pay your team. You still have to pay your software. So if you are paying to literally deliver services for somebody else, and when they pay you is up to them and it's flexible and it's all of these things, that's costing you, that's costing your bottom line, and it's making your cash leak clean out of your business. Quick story. So there are a lot of timing issues in small business. And small business very rarely have their numbers together enough to know that they're in a timing crunch. Just imagine if you do work for somebody and send them a 30-day invoice, right? So let's just say you finish some work at the end of January, send the invoice at the end of January. They're supposed to pay it by the end of February. They don't pay it. Your February is going to look lower than it actually is. They paid the invoice at the middle of March. You've already paid all of your costs to run your business in February, and none of the money was tied to it. So a lot of times with my clients, I'm going to try to accelerate collection. I'm going to try to make sure you get a deposit before work start. The deposit should roughly cover what your costs going to be. We're going to structure this stuff. We're going to structure our invoice and billing to actually make sure that it works for everybody, because in small business, we simply can't afford to work for free. And in a lot of cases, you do a whole invoice worth of work for free, and then you have to pray that these people actually pay you. And then you have to hope that they pay you quickly. And then you have to just, I guess, pray, hope, dream that they actually come through before you run out of money while you're paying your team. So poor invoice management is a terrible one. Number 4, over servicing low margin clients. See, this is a key difference between small business and small minority owned businesses and big business. We are so loyal to those old clients who were with us when we were figuring things out that sometimes those clients actually become not profitable for us. And it's the clients that's been with you the longest at that same grandfathered rate that really kill profit. Because a lot of times, and check me if I'm wrong, I'm never above being checked, but a lot of times those are the clients that are the most hard to serve. They take up more resources, they take up more time, there is more of those one-off scope creep things, so it's just a lot going on, and in a lot of cases it's a lot less margin. But for you who's paying the cost to be the boss, if you have a team, your team is spending a lot more time on people who don't pay you as much. And again, the loyalty is good. I like loyalty. I'm loyal to my older clients, but we do have those conversations because my margin just has to be the margin, because the loyalty, the appreciation, that's not the business conversation. Those are business feelings, but the business conversation has to be, do the numbers work? I simply cannot serve my clients at a high level, pay my team if the numbers don't work. And if you have clients who've been your clients for a long time, chances are they're business too and they get it. And if they don't get it, Take your time and thoughtfully explain. If you can't afford it, you just can't afford it. And you don't have to, maybe you don't have to always charge your full current price for new clients, but you cannot take L's and you cannot take too small of a profit just because you're really over servicing low margin clients. And again, it's those old clients, it's those friends, it's the people who just got a good deal, it's those people, because that premium attention at a discount rate. Oh, that's a good one. That was coming off the top. Let me make sure I get that right. That premium attention at a discounted rate can literally kill companies, because the premium attention costs you a lot and that discounted rate does not pay for what it's costing you. All right. Leak number 5. We're almost to the end here. Unstructured owner compensation. You know I had to talk about this one because this is probably the biggest cash flow leak in small business. And it all comes down to the stuff we talk about all the time on this channel, right? It all starts with clean books. The books aren't clean, the profit isn't clear, the cash in the bank is misleading, all of these things. And it's those non-strategic draws, it's those pull, it's that owner distribution, it's whatever you want to call it, that really kills cash flow, because it's based on an assumption and not a strategic plan. Again, everything in business has to be a part of a strategic plan. Owners in small business way too often just take what they think they can take. And when they say I just took what I think I could take, that literally means I made a guess on how much money I could take out of this business. And y'all, that's stealing. You only get to take, if you running your business on the up and up, you do not get to take all the cash in that business. You can only take a distributive share of profits. That's what's going to make you look good for banks, investors, anybody who wants to come in and like help you grow your business. If anyone who is tasked with giving you some money see that you may just take that money and not like a share of profit, they're not going to give you that money if they know what they're doing. So it's the owner distribution, and it ain't typically like a lot of accountants and stuff get online and talk about like it being, I think I said this in the last video or video before, a lot of accountants are accusational. It's like they assume that it's a discipline thing, it's a maliciousness, and most of the time I know it's just people don't know better, and people are trying to survive. People got kids, got bills, blah blah blah, so people are taking what they need, taking what they think they can take, and all of these guesses and assumptions and blah blah blah. But what it has to be is a strategic choice. Distribution draws, that should be a percentage of profit. Now, you'll probably have to get with your accounting professional to see what your goals are and what percentage of profit makes sense, but it needs to be a percentage of profit. You simply can never, ever, ever take more money than you're making. That's stealing. And you stealing from yourself, stealing from your baby. Anyways, I won't beat a dead horse on here, but owner pay is probably the biggest cash flow leak, the biggest invisible cash flow leak, because owner pay doesn't even show up on the P&L. So you may be losing track of exactly how much cash you're taking out of the business. So just real quick, I'm gonna run through the list. So leak number 1 is gonna be underbilled work. That means you're doing work that you're not billing for. Number 2 is gonna be scope creep. You're doing additional work that wasn't a part of the original agreement and you're not charging for it, so you're doing more work. So first, it's you never billed for the work that you're doing, and second is you actually doing more work than what you bill for. So 1 and 2 are very similar, just slightly different. Number 3, poor invoice and billing management. That has to be tight. It gotta be tight. People gotta pay you for the work you're doing. And once you ask for your money, people have to pay you when they're supposed to pay you. And it's up to you to come up with the type of invoicing policies and the timelines and all of that stuff. I'm going to always say get a deposit if you can before, no, not if you can, that softens it. Get a deposit before you start working. Do not build a business around you working for free and leaving it up to chance and integrity that if you actually get paid for your work done. You want to have enough of a deposit to at least break even on the work, and then you're not as vulnerable to people not paying or paying late. But even if they do, there should be penalties, there should be consequences and repercussions. Number 4, Over serving low margin clients. This isn't one of those things where I'm saying get rid of your old clients. You just have to keep the expectations clear. And this ain't a loyalty or I appreciate you conversation. It's literally the numbers have to make sense conversation. Number 5, unstructured owners compensation. Just taking too much out of the business. Just not tying what you're taking out of the business to the actual business performance, the actual profit, the actual things that we already know about cash flow. So it's almost like robbing the business blind. And that is it. We taking it to the end because this the real list that truly affects most business owners. Again, software and meals and all of these expenses, they can creep up on you, but you know that stuff. Like, watch what you're doing. Don't be having a whole bunch of softwares you don't use. Don't be going out to eat all the time if you ain't got no money. Don't be traveling if you don't have no money. Like, all of this stuff should be a healthy percentage of revenue. But the things that we talked about in this video, that's that next level scale that once you lock these things in, you can actually build a business that scales and scales a way where you can actually, duplicate it, double it, triple it. So that's it. These are the things that are quietly, probably hitting that cash, hitting that P&L, hitting that balance sheet that you don't see. And again, you stop these things, you can actually grow the type of business that you're dreaming of. That's it. Like, comment, subscribe, and I will see you in the next one.